Market strive for balance, and constantly you will see that the market create an imbalance and then go ahead and fill that imbalance. This is how the market moves. Understanding this will give a big advantage to a trader to see the directional bias in the market. So in this video I'm gonna show you how to identify imbalance in the market, so the next time you can see which way the market is heading. So before I begin this important lesson, make sure you smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. So let's try to understand this analogy to understand how the market creates an imbalance. Now imagine that there is a chain that you need to hold on. Now what will happen if the chain doesn't connect all the compartments to each other? You very easily understand that wherever there is a gap in between the two compartments, the chain will not sustain, it will fall apart. Now these are the imbalance in that chain, right? To maintain the structure of that chain, there must have to be a connection in all those compartments in the chain. If there isn't, then these are imbalance. The market does exactly the same way. When you see a market is moving, let's say a big impulse, a candle has created like that, there has to be a connection with the next one going up to create the balance. Okay, this is the balance between the buyers and sellers in the market. But in reality, the market will never do all the time in the same way. You will see the market will create a move, and in majority of the case it will leave an imbalance in that zone, making a gap. And as you know that the market needs a structure to hold on. So when the market started to create so much of imbalance, at some point the market break down to fill that imbalance in the market. So the bigger the imbalance, the stronger the movement, and the directional bias become more and more high probability. So now let me show you in the chart exactly how I identify imbalance in the market to find the high probability trade setup. Okay, so let's see this example on GBP JPY. This is the recent chart. So we'll be starting from the bottom. Now look at this one here. This is a doji, has crossed all this low. This is an important area of support level. Let's draw a level here. Now this doji, as you can see, after grabbing liquidity from this high, this is the top of the doji. Let's draw a level. Now see how the market moves. This high, this is the low of this doji, this is the lowest point, and this is the highest point of that candle. Now the next one, you can see this is another doji, just has tested that previous resistance as a support. So if you consider it as like a chain, then you can see that this circle has been connected by this candle. Let's cover them, all of them up together. Okay, now once you saw that previous resistance is turn support here, this is another higher point of the same doji. Let's point that out as well. So you see that this is the other part of that chain. So that zone, that resistance tested as support, created another high. So let's draw this high here. Now this is where the market started to create an imbalance, because if you draw this circle here, you can see that the market did not started its move straight away from that level. This level has not been tested, giving an imbalance in the market. And you can see that up to here the market was in balance, and from there the market started to create an imbalance. And look at that market here, and afterwards every candle, quite a few candles created with an imbalance until the resistance level. which is the monthly resistance. And then once the market created enough imbalance not to be able to go further, the market has broken down. And once it has broken down, you saw that the market again started to feel that imbalance towards the downside. Now look at this downside. Where is the last point? In fact, the market started its imbalance is the key points to look at, because in majority of the case you'll see the market will come down to feel that imbalance, the last one that it has created in that whole movement. This is the points that starting of the imbalance. As you can see, whenever the market has come here, there is a long wick candle already created. There's a strong rejection. Now with that rejection, the market might even come down further with that load and may create another imbalance towards the downside. So looking at imbalance will tell you in fact which way the market is likely to be heading, and the more of longer wick, the more imbalance in the market. Now let me show you that example, that how you can identify imbalance based on the wick of the candle, which is very, very important. Okay, so let's see this dollar CAD example and let's find out where is the imbalance in the market. Now if you look at this candle here, okay, this is the lowest point of this movement, and if we draw a resistance and support level, we can see that now with that movement, with that candle, what is the next move? Now you can see that with this one, the market has reached that level and then has filled all those imbalance, and then we see this high is created. Okay, now you can see that from that level there is this candle has formed, okay, which the next one also has come to fill that imbalance. So up to here the market is in balance, so we can draw all of this level. This candle is filled, and then we saw that the next one penetrated every candle, filled that imbalance. Up to here we saw the market is in balance. Okay, now see what happened. This candle has gone up close here, and the next one did not come to fill that imbalance. So you can see that up to here the market maintained that balance until this candle, the market left an imbalance in that area. Now with that said, there are more imbalances you will spot along the way. Now as you can see, the market afterwards is now coming back down to fill that imbalance in the market. Now it is not necessarily that the market will immediately come down to fill that imbalance, but when you see the market left an imbalance, then you know the directional bias in the market, and you know where, if you see the market is rejecting strongly after filling that imbalance, then highly likely that this market will reject from this level to fill another imbalance that it has made. For example, when this market is dropping here, it again create another imbalance in the market. Okay, this is the neckline, okay, support zone, down resistance, as you can see, and this candle has formed, did not fill that imbalance. So there is a high probability that, let's say, if the market has come here, fill that imbalance, and after penetrating this created a long wick candle, then we know that okay, the market was in imbalance in that zone. Now highly likely that it fill that imbalance, it will go up to fill that imbalance, and it is a very advantageous to know that where is the imbalance to set the profit target and also to see the directional bias in the market. I strongly believe that this important lesson was helpful to you. If you find value in it, then don't forget to subscribe. Thank you very much. I'll see you soon in my next lesson.